Hello, everybody. Welcome to episode number 5 of Confessions of a Market Maker. I'm your co host, Ray, aka All Day Ray, aka Paulie Walnuts. And I'm joined here with my polished co host, which whom folklore is already being written about. He's alleged to manipulate a stock down for 45 straight days. He used to spend retail money to buy tailored suits to fit his gorilla frame. I'm talking about VWAP trader, Saskatchewan's finest, JJ. JJ, how's it going?
Good, Ray. How you doing?
I'm
Oh,
doing good, man.
uh,
I'm just glad I made it through that intro.
yeah, no
Um, man, no, I'm glad to be back doing this. And, just a quick reminder to the listeners, if you guys enjoy this podcast, if you could please just rate and review it on whatever platform you guys are listening to. Me and JJ would greatly appreciate that. And, last week we had on our first guest ever on the pod, Peter Resnicek. Um, Very sharp, intelligent guy. I thought it went great. What do you think? What are your thoughts, JJ?
well, of course, I'm a huge fan of his, and you know everything that he taught me, I was able to apply in the last 3 trading days to see the market so clearly. So I was really, really grateful to have him on the show, and very, very appreciative of everything that he and Mr. Dalton share with us. Boy, just yeah, I can't say. I'll just keep rambling if you keep talking about Shadow Trader. I know it sounds like I'm a paid shill, but the guy just he teaches me so much. It's just amazing.
Yeah, definitely. Yeah, we just pay respect where respect's due. Um,
Exactly.
yeah, and so today we're going to be talking about a topic which I think is going to be very relevant to our audience, to new traders. I mean, even experienced traders alike. We're going to be talking about the micro futures. And so we'll start off with that. JJ, just want to just explain what the micro futures is.
Sure. Well, a couple of months ago, or the CME came out with a new product, the micro futures. I trade the E Mini. So the micro is the micro version of the E Mini. It's a tenth, so each tick is $1.25. Um, it is a really wonderful, wonderful new product because it addresses an insane demand of new traders looking to trade a market that's not going to, um, for lack of a better word, steal all their money. A lot of new traders are coming into the market looking to trade cheaper priced, low float, penny stocks, things like
Hmm.
that face a lot of dilution. The micro is a cost effective way for them to enter the market, open an account, use volume profile to look how structure of markets is created, and to be able to trade and watch order flow as it prints out on a volume profile. It's just a fantastic product. It's Mr. Dalton says, there is no junior stock market. Well, now there is, and if you
Hmm.
have a bad day in the micro, you lose $50, maybe $100, and that's if you really are not prepared or not doing any sort of trade prep or trade management or risk management.
Hmm.
So I think it's a fantastic new product.
Yeah, no, it definitely sounds like it, and it's something I wasn't even aware of until first speaking with you, and I'm sure a lot of people aren't even aware of. And you said it's perfect for newer traders. Is there now concerning the pattern day trading rule? Is there any PDT behind this, or?
There is no PDT in the futures market. It's a wonderful thing. There's no PDT, which means you can buy and sell, you can short within the same day. They do not limit you to the number of trades you can do in your account. It is a highly leveraged product, right? Futures are not for everyone. So, I should, if we had a team of lawyers, which we don't, but, I should put out a disclaimer that futures are a leveraged product and it's not suitable for everybody's, investment uh, time in their life or whatever profile. Having said that, it is a wonderful product for barrier to entry. You see these firms like AMP Futures, etc., that allow you to open an account with a very small capital outlay, and their day trade margin I think is $40, and you get sort of like uh, round trip, which is a buy and sell for 78 cents, you can't go wrong. It's like trading a sim account. You can learn, but with, actually being able to put your money on the line and have the feeling of trading a real, the real feelings that you get when you're trading, the fear, the
Right.
greed, how to control your emotions, and it's just a wonderful thing.
Right. Right. Well, no, which I think is very important because I think back to even when I first started trading, and I know a lot of people like advise to like paper trade at first before putting your money on the line, but in reality they're both kind of different. It's a lot different when you actually got money riding on it,
Oh,
and
definitely.
the emotions that come with that. So at least that's good. It like simulates that feeling that you get.
Yeah, everybody will tell you on the simulator, they're like Stephen frickin' Cohen, right? They're having $25,000 days, $100,000
Yeah.
days, you
Right.
know. But you take that sim off and you put money on the line, and I'm not talking, and I'm no better than anybody else, right? It's something,
Hmm.
the emotions that you have when you're trading, you really get to know yourself. Trading, the market, and boy, you really get to know yourself well, where your strengths and your demons, all that stuff starts to come out. Um, and yeah, so the micro gives you a way to tap into all of that without blowing yourself up. Because I talk to a lot of newer traders, and I'm really quite surprised that even some of them have gone to these fancy trading schools. They teach them, risk management that is just like, oh yeah, it's okay to lose, $600 a day. And then you'll have the one big one. Things like that. I mean, like, what are you teaching these people?
Hmm.
So, and you can learn the basics. You can take your time and learn how to observe a market. And observing a market and observing price action and observing how order flow gets structured throughout the day, depending on the agenda of the people that are, running this market. The market is not here for our health. It is here for people to transact, and it's here for larger institutions and sophisticated investors to sell what they bought at extremely low prices to you at higher prices. Just like any market.
Yeah. Yeah. Now, now I don't know if this is going to apply. Like, so for example, like with poker, right? So how, we talk about like bankroll management in poker, and there's also this applies to trading as well. Is there a like an amount you would say that is too small? Like, is there a recommended amount you'd be like, okay, you need at least this to start off with?
I
Um,
Yeah,
yeah.
I'm not a professional in that sense. There is a gentleman, Futures Trader 71. If you guys follow him, I'm giving him a shout out because he owns a firm and he does teach a lot of traders. You might want to, he's got some recommendations. Um, I see a lot of people starting out with $1,000, $2,000. And that's what they'll start out if they're trading penny stocks too. Now that might not be optimal, but it all depends on your personal risk profile, your finances, where you are in life. So I can't really say off the top of my head because I'm not really qualified to give that kind of advice.
Yeah.
But I would definitely make that money, that if you are, whatever you're risking, that's your money, that's your educational money. That's how you would think of it. If you're opening an account and putting $3,000, $4,000 or $2,000, that's money that, that's not going to pay your light bill, right?
Hmm.
So that, you're putting that towards your education learning. If you lose it, that is a part of it, your education. And let's hope you don't lose it all, you know?
Yeah, yeah, exactly. You never want to risk money that you can't afford to lose.
Exactly.
That's the way I look at it. Um, and so what brokers are you allowed to trade on the micros?
Any futures broker, I would imagine, that trades the mini. I'm sure they're offering the micro as a product for their customers.
Okay, okay. Now for somebody like, let's say they want, someone with a small account, right? You're suggesting this is the best way for them to go. Where a lot of people want to go towards the penny stocks, maybe with these small accounts having dreams of running it up right now. Let's
Exactly. Yeah.
say, and so learning the equities, or I mean learning the micro right now, learning those skills. Let's say they build up an account, or is that something, these skills that they're going to learn is going to equate to trading equities, or are they different skill sets?
Oh, no, trading. the rules of order flow, supply and demand, balance, imbalance, inventory, all of those structural things that you see, the context of the market, all of that stuff will apply. Now, having said that, I trade the E-mini and watch the E-mini, and I watch the micro too, and I'm very focused on those markets. Those markets are always the same every day in that you don't have different, you know, if you're trading a different stock every day, you have to kind of get to know that stock a little bit. A lot of these cheaper, low float stocks, they're low float for a reason. When my clients take a company public, they buy a shell and they own all the stock. So there's no stock in the float. And when the float starts to fill up, that's you buying their stock that they bought for a tenth of a penny or a hundredth of a penny, and they're selling it to you for 50 cents or a dollar or $2 or $3. And so they're filling up the float with their virtually zero cost stock. So the agenda of that sort of thing is completely different than trading a regulated futures market.
Hmm.
You won't have things like, and nobody will really understand what I'm talking about, backfilling from an offshore account, where the promoter is, has a market maker catching all the retail, selling short to them, and then selling them his position at a discount from where he sold, so he makes a nice spread for representing the orders, and then you get to sell, your 2 million shares from your offshore account. That's what these guys do, right? So that's a completely different agenda, right? The agenda of a penny stock market is to bring you in to sell you as much stock as they can for as long as they can, right? At the highest prices they can, right? The futures market is based on this time the S&P 500, so you're looking at 500 real companies that have accounting standards and compliance and things like that. So the order flow and the price action is completely different. It's much
Right.
more stable. I mean, I honestly, I wouldn't, I honestly, I've done it for years, feeding market makers order flow. I don't know why you would want to trade equities in a penny stock when you could trade like a micro or a mini and have smooth order flow.
Yeah. Yeah. No, no, absolutely. Like it's just the odds stacked against you trading penny stocks is, so much. And like that's why like when I first started doing it, I ran right back to poker. I was like,
Oh yeah.
I was like, no way. Like, like this is way harder than poker. And I know I was still new and everything, but I know a lot of people face these same challenges of like going into trying to trade the penny stocks and just getting crushed. And then I think from there, losing confidence when in reality, the odds are just so stacked against you
It is.
that, it's like who's going to succeed doing it? Probably very few, if any. You know what I'm
There,
saying? Like
there,
very, very few.
there are a couple of guys I know who have done it and made money, but I don't. They're they're the exception. They're not the rule. And that's, and it's sort of because people are always looking for that, show me how to make money really quick because I really really want to buy this Mercedes, and
Yeah.
that's and I understand that because I'm not better than anybody else. I've done that, thinking the market's going to pay for something, or in my case, oh, this deal will pay for a house, or this deal will do this, and that's not the way you're supposed to look at it. So I am completely guilty of making all of these same mistakes. You know,
Yeah.
um, it's so I'm no better than anybody out there. I'm just trying to say here, this is what I've gone through. Maybe it'll help you.
Yeah. No, exactly. And so, trading the micros, what are some of the mistakes, you would see newcomers make?
The first mistake I've seen newcomers make is to treat it like sort of like a lottery ticket type thing. Oh, I'm only losing $50. It's not a big deal. Oh, it's only
Mhm.
$10, $50.
Yeah.
And that means that you're not respecting risk. Because when you switch to a bigger market, if you don't respect risk, boy, it's going to teach you a lesson, right? It's going
Hmm.
to take you out to the woodshed and give you a whooping like you will never ever get, you'll never forget it, right?
Yeah.
So that's one thing. The other thing is a lot of people are like, oh, I can only make 50 bucks. It's like, woohoo, I only made 50 bucks. No, that's not the point. The point is you're learning how to trade well, right?
Right.
And you're learning how to trade well. You're learning how to manage risk. You're learning how to monitor a trade for continuation. You're learning how to identify structural anomalies in a market. You're learning so much that if you treat it with respect, um, it will repay you a thousandfold. And that's why I say about people who think, okay, it's okay to lose $600 a day or $500 a day on stops. You're not respecting your capital.
Right.
You know, you have to that money, you worked hard to get that money. Don't throw it away on a stop, right?
Yeah.
Learn how to take a higher odds trade by using the profile to show you where the buyers or sellers are trapped, so you can put a trade on, put on a much smaller stop. And if that trade doesn't work out very quickly, you take it off and you scratch it, right? Instead
Hmm.
of waiting three handles for this thing to work out because you don't know structurally where to put your entry or your exit. So that's what I really feel. That's something I'm kind of learning. That's really opened my eyes because I was like that too. I was like, okay, lose $100 here. I was like, ooh, okay, that didn't really make me feel good. And so I was like, there's got to be a better way, and that's why I'm such a proponent of profile, because it visually prints out order flow so my lizard brain can figure it out. You know,
Hmm.
and that's the one thing. You respect your capital because it is, you got to keep your gunpowder dry, right?
Yeah. Yeah, yeah, yeah. No, no, definitely. I 100% agree with that mentality, and that that mentality, hasn't always been something that has come natural to me, and maybe most people as well, because I think that's why the penny stock are so attractive, because people are looking for those home runs, right?
Yeah,
Instead of like the base hits,
yeah,
where you mentioned with the micros, you're going to have to be more okay with grinding it out, is from what I'm hearing, right? 50
exactly.
here, 50 there. But now the question is, how does somebody become okay with that like grinder mentality
Well,
and
it's
grinding it out?
see, the thing is, a $50 hit in the micro is a $500 hit in the mini,
Hmm.
right?
Right.
So you have to keep that in perspective, right? It's not the dollar amount; it's the number of handles or ticks that you achieve or lose, right? And if
Hmm.
you're losing a lot, on these trades, then you need to look at your edge and see why. Is it my trade location, or am I not understanding the context of the market? Have am I not understanding? Like this morning, everybody thought the market was going to go down, right? And I saw the overnight, and the way the overnight structure was, you could tell the shorts were trapped, right? They'd been pounding on that, near 63 door. They couldn't get it lower, and so the overnight inventory was short. We had a really thick area of value from yesterday where trade was back and forth. So overnight inventory was short. The auction was to the upside. Then they held value in the same area. And at the end of the day, they ran the stops and blew off what they bought into the short covering. So it was just beautiful. And the Dukes, the people who make money on commissions, whether you make or lose money, they had a really good 2 days. They got everybody short, and then they made them cover. And the profile just showed it. You could see it. It was so, and I'm not saying I see it all the time. Good God, no. Like sometimes there'll be weeks where I cannot see a market. So I'm not, I'm definitely not a guru, but this time the profile grabbed me by the neck and it slapped me and it said, this is
Hmm.
what's happening. Right.
Yeah.
And I think that kind of comes from actually talking to Peter too, and doing kind of a lot more sort of homework.
Yeah. Yeah. Shout out to Shadow Trader.
Yeah.
So yeah, I mean, you talking about like preparation, right?
Yes.
So like you're able to, you say like, you're not always able to see it, but when you see it, you see it. Now that's due to your preparation, right? It's not like you just wake up and you've been able to read a TPO chart,
Yeah. I
like the
mean,
morning paper, right?
yeah,
Like, mhm.
there are people I've heard of people who can come into a market completely unprepared and just trade it naturally. I've heard of such people, right? I've seen guys who run trade desks do it, but they have the tools that they have at their disposal to trade a position out. is completely different than a retail trader. But I've never seen a retail trader who doesn't prepare come in and just kill it, right? Maybe
Hmm.
there are, and I'm sure there are. There's got to be. I mean, it's a big world. I mean, I don't know everything, but I haven't. I'm not that smart. I have to prepare, and a lot of people don't like doing that. I do the homework at night. I wake up in the morning and make sure that the homework at night coincides with what the morning is, and what the overall, are we in a trend or are we in balance? And if we're in balance, what are the extreme ends of that balance? I'll look at those things, and I've actually come to really enjoy it. Right.
Hmm.
It also helps where I live is minus 40 for 3, 4 months out of the year. So there's really nothing else to do. Right. So, and
Yeah.
I'm not into ice fishing. So, you know,
Yeah.
I do
No,
spend a
no
lot of time.
distractions. Yeah.
Yeah.
Yeah, so if you live somewhere where there's a lot of distractions, maybe good nightlife, beautiful women, move out of that town if you want to get good at trading.
Yeah. It's kind of like when Rocky goes to Russia to train, in
Yeah.
solitude, right? Sometimes these things have to be done, you know?
Yeah, no, no, sure, no. We joke about it, but it's it is that type of dedication though that leads to success. At the end of the day, um, and yeah, so people looking to trade the micros successfully, is there any place you would point them to, resources?
I really would have to, say Shadow Trader, and of course Jim Dalton. Jim Dalton is, he's the one who, went to the mountain and came down with the tablets. I am deeply indebted to him. I think he's a national treasure. I am trying to put something together to help newer traders understand and see markets, and I'm working on that. And my, I've sort of, since starting to do this podcast and starting to be on Twitter and things like that, I've met a lot of new traders, and I've met some really, really nice people. And but boy, they're educationally, a lot of them will go to these places, and I don't mean to disparage anyone, but they won't teach them the difference between an uptick and a downtick, or even why a market exists, or why this is all happening. It's just get in there and use this indicator and trade, and that's okay. It's a free market. You can make your money charging people whatever you want to do whatever you want, and if they pay, they pay. Buyer beware. But I'm just telling people out there, um, there is a reason why all this is happening. Start to learn about that, and spend more time watching and listening. There's so many good resources out there. Everybody, has a list of good trading books. I know people hate to read now too,
Yeah,
because we
yeah,
live in such a fast paced environment with smartphones, and God, I sound like an old guy. But I'll tell people to read a book or to read an article, and maybe 2% of them will read it. You know,
yeah.
so it's a completely different culture, and so I'm trying to develop something long term, and I need a lot of help because I'm no expert myself, but I'd like to do something to show people why this exists and what you should be looking out for before you step into traffic.
Yeah, no, definitely. And I know, I'm sure a lot of people, and myself included, will be, looking forward to that because the lack of void in the industry of, really teaching people the right way. And you spoke earlier about, maybe there's people out there that are retail people that aren't able to, do any prep work and come in and crush the markets. And maybe there are people like that, but for, the fact of things, 99% of us need to really work our ass off and to come in and be successful. And I think that's something that both me and you pride ourselves on, is that just being real with people, and not being fake, not being fraudulent, and letting the risks that you do face.
Oh yeah, definitely. And everything I'm saying, it's not like I'm sitting there telling everybody that I don't have losses, and then sometimes I'm racked by stress, and I won't take trades that I even see. I'll see the trade coming an hour earlier, and something stressful will be going on in my life, and I won't take the trade. because I don't trust my emotions at the time. And
Hmm.
part of becoming a trader is being able to separate that. And the true pros, you'll see them. They can trade through an earthquake. They can trade. And I used to be like that when I was on the other end. I've
Yeah.
traded through earthquakes, building fires, and everyone was losing their head, and I'd just be sitting there, and the monitors would be shaking from the earthquake, and I'd still be calling my market makers. So I understand what it's like to be in the zone and to be out of the zone, and
Hmm.
so I'm saying definitely. I'm just trying to help people by the experiences that I've had, and maybe I can sort of lend sort of some sort of insight as to what's going on underneath all of this.
Hmm. Now, how did you get? How do you know? Does that come with like experience? Being able to a trade. Let's say like for example, you said you through an earthquake, you're able to trade. Let's say you're able to trade when you're going through like a lot of turmoil in your personal life. Like does something like that? Does that come with experience? Does are you maybe does it come times where hey maybe I need to step back and not trade? Like what
Well,
was your process as far as like I guess we'll say like the mental maturation in your
see,
trading?
the trading thing, I like trading through earthquakes, and especially that building fire that I traded through. Uh,
Wait,
we,
through a
right?
building fire?
Yeah. There was some stuff going on, and I was waiting for a block to be taken off my hands, and I had a big debit, and I had to sell the stock, otherwise I wouldn't have gotten paid. But the building was on fire,
Yeah.
so things like that. Uh, that I comes from. I gotta say, a lot of it comes from my background as a bouncer, because I
Oh,
worked.
okay.
I became head doorman of the club that I was working at because the other one got shot. So
Uh,
compared to that,
you gotta by default, huh?
yeah, kind of compared to that, the stress really wasn't that bad at the time when you're young, right?
Yeah.
I'm not getting shot at. Yeah, it's not so bad, right?
Right, right.
Yeah, it's a little fire. Get some water. Good grief, deal with it, right? We've got bids to fill.
Yeah.
So that's the way I was sort of raised. And see, I was really greatly influenced by Michael Lewis's book Liar's Poker, and there's a line in that they used to tell people at Solomon Brothers in the 80s: when you wake up in the morning, you better be ready to bite the ass off a bear. And that's the mentality that you had when you went into that trading room, right?
Hmm.
You don't care what happens, right? You need to get the job done for your client, because guess what? If you don't, there are 1,000 guys waiting to take your spot and your
Right,
commissions, right?
right,
That's what you don't take holidays. You take holidays, you lose your clients,
right,
right?
right.
That's the way it worked on my end anyway, right?
Hmm.
There's no 2 weeks off. There's no coffee breaks. You know, that's that world wasn't didn't even exist to me. You know.
Hmm. Yeah. Yeah, so you guys have heard it from JJ himself. If you want to get better with the, risking money, go out and risk your life, and
No,
then
no,
it
don't
will
do
be.
that.
No, just
God,
kidding.
great. Here come the lawsuits.
Yeah. Oh,
No,
yeah,
no. Just
yeah.
I'm just saying, for me, because I was young, and when
I
you're
know.
young,
I'm playing.
when you're young, you think you're indestructible. Okay,
Yeah, yeah,
you do, and you do stupid things. So you will take on more risk or not even realize when there's danger. But and I do not advocate that to anybody.
yeah,
But
for
I'm
sure.
just saying that's where I came from risk. Now, I'm older. I've had a heart attack and a quintuple bypass. Now I'm much less, a risk taker. I
Yeah,
will. It's got to make sense, right?
yeah, sure,
You know,
sure. Yeah, definitely. Yeah, I think like for myself, at least like relating to poker, and this is where there's like really no separation between trading and poker is like the risk management end of things, and from coming over from poker to trading, like that wasn't a problem for me. It was more my technical skills. But when I first started playing poker, man, like my money management, my emotional management was just a wreck, and for myself, I just had to really like learn the hard way. Um, and I guess it was just like the stubbornness to stick with it. And I think there's different paths to to getting to that point, to the maturation. And speaking back on something that you mentioned before about people not liking reading these days, or and we spoke offline on this, that people, educational material has to be like somewhat fun for people to learn, which is
Yeah.
kind of absurd, which is a little absurd. I know both me and you are in agreement with this, but like I think we've discussed that people's lack of to like go like the extra mile is what's
Well,
preventing a lot of people.
it's almost like you have 30 seconds to keep somebody's attention these days,
Yeah.
and anything beyond that, you quickly lose their attention. And that's just, I guess, the world we live in. So we have to adapt our education, to sort of, the days of, like when I was young, I would have gone to a trader. I went to, I'll wash your car and, clean your house, teach me how to trade. Right.
Yeah.
Those days are, people aren't going to do that anymore. They're like, I'm not going to do that. So, like, because we looked at these guys as gods when, you saw somebody trading out, a couple $100 million and, making, 10, 20, $30 million a month for doing it. You just wanted to go and learn from them. And also that doesn't exist now. It's hard for people to get access to people
Mm.
like that.
Yeah.
The whole industry is changing. In the old days, you had bars where all the traders went, and if you socialized with them, eventually one of them would get you a job in the mailroom or something at a brokerage firm, right?
Hmm.
So, I mean, if you look at Sidney Weinberg, he was a janitor at Goldman Sachs before he became CEO. Those days, are gone. I'd like to sort of make educational content that people actually enjoy and have. And enjoy the process, and learn something along the way.
Yeah. Yeah. No, exactly. I mean, enjoying the process. That's like, I think like a huge key to like, anything, because you're going to spend a lot more time like in the grind than, like your glorious
Oh yeah,
moments. You know what I
you
mean?
know, definitely. And I love the history of Wall Street. I mean, I'm a Canadian, and the history of Wall Street is just fascinating. I mean, you look at guys like James R. Keene, making a market so they could sell $1 billion worth of U.S. steel into it. I mean, stuff like that is just amazing. You read about Commodore Vanderbilt and how he cornered Harlem Railroad, in a short squeeze. That stuff is just, I find that stuff really amazing. American history is just fascinating.
Yeah. Yeah. No, no.
And you can apply a lot of that to what's actually going, what happens in a market, because the agendas of human beings don't change.
Hmm. Yeah. Yeah, definitely. And all right. Well, JJ, I mean, as far as I know, we discussed the micros, we discussed a little, trading, psychology, emotional handling. Anything else you want to add on the micro bit or
No, I encourage everybody to check it out. If they want any help at all, just give me a message on Twitter. I'm VWAP Trader One, and I'd be happy to help anybody who wants to get started. And if I can help, or if I can guide them to resources like Shadow Trader and Mr. Dalton, and other resources, I'm very happy to help.
All right, excellent. Yeah, and then also, JJ himself is on the works, of working something, putting something together. So we'll be on the lookout for that. So next week, we should be having another guest on our podcast. Very excited for him. New York Times best-selling author, correct?
Yes.
Yep, New York best-selling author. And he's a consultant on the popular Showtime series Billions. And we're Attorney Duff. And from what I have been told, you've met him in real life. You guys crossed paths, correct?
Yes, we did.
Yeah.
On a very, very, very inebriated night in New York City with some of the traders from the Dear Boys from Night Capital. If any of you guys are out there, I miss you guys. Yeah, I met Turney, and Turney was working for Galleon at the time, and I was a lowly bulletin board trader. I mean, I fed these guys a lot of order flow. And I met Turney, and he was one of the nicest guys because he was at one of the biggest, one of the bigger funds. He was a hot shot, and when he met me, and he was like, I'm a penny stock, trader from Canada, and he was so nice to me. He never, he was never condescending, or he was just a really good guy, and we had a great time, and both of us can barely remember the night. Um, well, those night boys, they used to party pretty hard. So,
Yeah.
but yeah, Turney is a fascinating individual, and the book that he has written is just amazing because he totally lays bare his soul, man. There are some things that he writes about when you're on the other side of the desk, the feelings that you get. Like sometimes you'll have a great day, you'll make a lot of money, you'll have a lot of laughs, and you'll go home to an empty apartment at night, and you just, something's wrong. Things like that. It's just fascinating. The other fascinating thing about the book is that he writes about how a hedge fund trader thinks and what their agendas are.
Hmm.
And things like that. Like we just had the July 4th holidays. We had the market close at an all time high. And then you read about Turney sitting there trading on the desk when, on a holiday, shortened day or whatever it was. I think it was on Christmas time before his bonus time, and he was running up positions so his bonus would, be nice and secure and fat. So you look at the motivations of stuff like that, and of course, he'd pick like stocks that had low float and run them up.
Hmm.
Um, Things like that. Also finding out, he would never tell his sell side guys where his stops or what his agenda was because they trade against him. Things like that that retail people don't know about, right?
Hmm.
So that sort of insight, I'm dying to get his insight and have the people who listen, you know, you get it straight from the horse's mouth. I mean, this guy was, he was healthcare mafia. I mean, when he was at Galleon and the other fund that he was at, these guys probably were the other side of a lot of the stocks that retail traders took. And I'm not talking penny stock garbage like me. I'm talking real companies.
Yeah.
So I'm really, really, really stoked to have him on the show. And the other thing too is he consults for billions, and there are things in that book that you can see in the storyline of the TV show. And
Hmm.
we'll let him talk about that. But it's really fascinating how because I've read his book quite a few times. Because on my own little tiny scale, I'm writing a book about all my crazy experiences and about the 200 crazy clients that I had.
Hmm.
So I read his book to get some sort of a perspective, and it's a wonderful read, and it's a beautiful thing because he doesn't pull any punches, and he doesn't lie, and he doesn't sugarcoat anything. He tells us, um, you know, um, the good times and the bad times, and the depths of his despair, and he doesn't, he's very honest about it, which is nice.
Yeah. It's refreshing. Yeah.
Very,
Yeah.
very.
I'm super pumped to have him on. Very looking forward to that. And so, yeah, so that will wrap it up for today. Guys, remember, if you enjoy this podcast, if you could rate and review it, me and JJ would be greatly appreciative of it. JJ, another good one.
Yeah.
Thanks for being on. Any part?
Yeah, no, I just want to thank everybody, who listens, and I really, really appreciate all your kind comments, and I really appreciate anyone listening. And thank you to Steve and Dee for making this happen, and thank you, Ray, for being a great host, co-host with me. I love it. Have a good one. Good night.